Welcome to this month's Mortgage Minute, where we go through everything that's happening in the world of property and finance. Starting off with the cash rate, and the Reserve Bank this week has increased the cash rate by 0.5%, increasing it to 0.85. Now, most of the banks have passed this on. They haven't added any on extra, but the question I'm getting asked a lot is how far has it got to go? And should I be fixing my interest rates? Westpac and a couple of the banks have said the cash rate still has more to go this year. So potentially it has almost another percent to go up by the end of the year, up to 1.75%, but they are expecting it to peak to 2.25% by mid-2023, so next year. So they're not expecting it to go up to infinity. But what does this actually look like if you have a mortgage? If you have a variable rate at the moment, say around 3%, it could mean your interest rate could get to around 5.5 to 5.5%. So the other question is, does it make sense to fix? As you can see here at the moment, the current, say, 2-year fixed rate is 4.59%. And the difference in repayments is pretty negligible. So if you're trying to fix just to save on costs and sort of beat any repayment shock, it's probably not going to help there. If you're looking to fix for certainty of your repayments and making sure helping with your budgeting, that sort of stuff, it definitely can. If you want any more info on that, it's definitely case by case. So hit us up, and we can definitely check out what's going to make sense in your situation. If you should look at fixing, or if you should look at potentially writing it out and staying on a variable rate at the moment. The next item, which has been big on the media this week, there's been talks of a property market slowdown, crashes, collapses, all that sort of stuff. So what's the truth? The fact is, in Brisbane and a couple of other states, there's still actually been some pretty good growth, but the growth is slowing. The growth rate, so that's how much property prices are increasing year on year, is slowing down to some more normal historic levels. Because let's face it, if the property market goes up at 30%, it's not gonna be good for anyone really. And the reality is, for a lot of people saying like, should I get into the market? Should I wait? Our property market, is it gonna crash? That sort of thing. Rentals probably not in much of a better situation. Prices are sort of going up for rentals, so it's kind of like, well, my mortgage repayment's gonna go up, or my rental costs are gonna kind of go up. So what's better? Again, it's kind of case by case. So if you're sitting on the sidelines waiting, as we've sort of covered before, property is about sort of time in the market, not necessarily timing. And if you currently have a home and you're sort of freaking out or you're worried about what's going to happen, I guess you need someone to live at the end of the day. So if you want any help with that, or if you're wondering what your property is worth, obviously hit us up. We can give you a CoreLogic report to help out with that. The other thing too, that's the reality with the property market that the media isn't covering, is there's still a massive supply issue. Now the cost of construction is just wild. You can't build a new home. So if there's no supply and there's still demand, the property market just won't be in a position to crash. Now the third item we're covering today, new government schemes coming out from the 1st of July. So the Labor government has extended the former government's first home loan deposit scheme, now known as a home guarantee scheme. So that's where home buyers can get into the market with as little as 5% deposit. The good thing with this scheme is they've actually extended some of the price caps. So there was a bit of uncertainty, I guess, depending on who was going to get into government, but they have increased this. So in Sydney, 900,000, Brisbane, and major sort of centres like Gold Coast, Sunshine Coast, 700,000. So what we've seen from previous schemes is actually potentially going to sort of support any properties sort of under that value, because making another sort of 35,000 buyers in this financial year available to kind of jump in and get in there. So I guess, if you are a first home buyer, you're considering getting on the scheme, definitely let us know. We can get you shortlisted and sort of help you get prepared so you can jump on that. The Labor government also did announce the regional home guarantee scheme. So it's pretty much the same thing, 5% deposit, but specifically for regional centres. That's coming out later in the year. They also announced the home equity scheme. So that's where the government basically is going to co-own a property with you. So if you're doing a new property, the government will own 40%, you'll own 60%. And if it's an existing property, the government will own 30% and you'll own 70%. So the upside with that is you potentially have a lower mortgage. The downside is the government owns a chunk of your property. So you get sort of less of the upside if property values go up, but lower mortgage. With that home equity scheme, they actually haven't set a date for that. So there's not a lot of info on it, but keep your eyes peeled. We'll have more info on the channel. That's it for today, guys. Let us know what you think about this month's Mortgage Minute. If you need any help with finance, hit us up at huntergalloway.com.au. All right, till next time. See ya.